Shares in Domino's slipping about 1% today. The pizza chain topped sales estimates. However, the stock down. Let's find out why. We're joined by Danilo Gargiulo, Senior Analyst in U.S. restaurants at Bernstein. Danilo, great to see you. Thank you very much indeed for joining us.
Likewise, Andrew. Likewise, Andrew.
Marginal disappointment with the Domino's numbers today. Why do you think that is?
I would say the platform that Domino's has been offering is very compelling. They show that the sales are resilient even in situations where the macroeconomic environment is not strong enough. I think investors are having some concern regarding the duration and continuation of some of the sales into 2026 in a category that is proving to be particularly challenging.
Right. And is that just broadly the environment is challenging with consumers cautious?
Yeah, so the consumer remains cautious. I think management has been calling out uncertainty also in international markets, geopolitical and macro uncertainty that are evolving in international markets. The cautiousness on investors, I think, are mostly related to the United States and the path toward a reacceleration in 2026 after some of the kind of one-time benefit, according to investors, are going to be lapsing in 2020, at the end of 2025. So there is a little bit of concern whether the sales acceleration that we've seen so far has been a one-time acceleration versus perhaps our view that this is going to continue for a little bit longer.
Like other fast food companies, the Domino's has been offering deals. They've got their $9.99 US best deal ever. Does that must eat into margins to some extent?
Well, usually the value that Domino's provides is part of the overall strategy, and typically this is an acquisition channel for Domino's mostly. So in other circumstances, for other QSR players, when you tap a little bit more into value and you try to have a little bit more elevated value equation, yes, it does tap into margins and it does create uncertainty on the sustainability of the business model. So you tend to have very short cycle. Domino's has been built on that over time, and so I wouldn't say that you will see necessarily directly any sort of hindrance toward the margins for franchisees. If you look at the numbers this quarter, they were impacted by a one-time insurance extra charges that clearly impacted their overall margins. But the CEO confirmed to us that there is nothing to be seen regarding the sustainability of franchisees' same-store sales growth, and in fact, even the profitability, because it was mostly related to the U.S. company-operated stores only.
You have a hold or a market perform on the stock. Why are you relatively cautious?
I would say there are two elements here. Number one, the category itself is not a thriving category necessarily. To your point earlier, and rightly so, it's a very value-oriented category where historically it has been growing by 1% to 2% at best. And Domino's has been able to grow even faster through market share gains. Yet, obviously, this is not a booming category, and so being able to consistently outpace competition, it's something that could be hard to achieve. But more importantly, if you look at the Domino's stock today, it's trading relatively richly compared to their past history, in consideration of the fact that also 2026 has somewhat of an uncertain sales trajectory path, and so. We don't see an easy entry into the stock at the right moment from a valuation standpoint.
Can you tell us where Domino's fits? For years, I think they had the reputation of the pizza will arrive quickly. It won't be the best pizza in the world. I mean, that was their proposition. Now, are they still seen as a kind of a down market choice in that sense?
Yeah, and I would say, I would add to your point, it was also seen as a real differentiated company from a technological standpoint, okay. Right? At one point in time, Domino's was also seen as, a tech company that just happens to be making pizza. And if you look at today, some of these benefits or some of these competitive advantages have been diluting a little bit. Right now is the kind of biggest, the most at scale, the one with the best advertising and the best execution from an operational standpoint, the one likely with the best and more solid franchisee system that makes the entire system more sustainable over the long run. But I would say probably they tend to be the best value for money pizza that you can find in the United States, right? Not necessarily the cheapest, but definitely like the one that has the highest quality for the price that you're paying.
Would you order one yourself, Danilo?
I mean, look, I'm Italian, okay? I'm Italian. I'm from Napoli myself. So look, I have my own preferences in terms of pizza quality. But I would say for the standards and for what you can get for that amount of value, I did actually have, shamelessly, I should admit, for my kid's birthday party, I had Domino's pizza, this year. So yes, in the right occasion for the right situation, I will get pizza myself. Probably not the highest quality that I can get as an Italian.